How nice. No? Afternoon, everybody. If anybody is online, am I audible to you also?
Audible,
Yes,
sir.
good evening.
Good evening.
Thank you. All right. So I was not able to meet you on the day of your first orientation class. Sorry for that. So we are starting the class today. Before we start the class, I just tell about me. Myself, Dr. Muthu. Okay. I work for a regular courses in some other universities. Here I just come for on Sunday only to transact a course called Accounting for Managers. I'm audible to all of you. So I have some 20 years of experience in this teaching, but I have not seen any day the real time accounting field of some companies or something like that. You may be so many people sitting here working in some companies in one way or other positions, right? Anybody is working as an accountant? Yeah, an accountant is, oh, many of you are there, so you have to help me whenever I'm having some doubt. Okay. Not only me, the entire class. All right, so we have a support system here. Some real-time accountants are there. Okay. So my qualification, I did my BCom, then MCom, MPhil. Then there is a test called a National Eligibility Test in India to be a teacher. Then obviously you have to do that. I did that. And then everybody is doing PhD nowadays. I also did my PhD. So BCom, MCom, MPhil, NET, and PhD. This is my next plan is teaching you accounting for managers. That's a short-term plan. If everything goes good, that we can have a middle term, I mean, mid-term plan also. Okay, all right. So I have been attached with the Dayananda Sagar University for the last 4 years, I think. And I have been teaching this particular course for all your seniors also. Very beginning of the inception of this course called EMBA, I was teaching this course. I have been teaching this for your seniors as well. Just one batch gone. Now you have come in. Okay. So this is my introduction. As this course says executive MBA, the program says it's an executive MBA. So you all working in some companies, as you told, okay, in different profile. Okay. This course is having only 18 contact hours. I think that all told to you, right? 18 contact hours, 6 days. We are going to meet 3 hours each a day. Okay, so one of the days is today. So what I request you is, you cannot only rely upon these 18 hours deliberation, what we are going to have today. I mean, this particular course. You should also take some efforts on your own, as well as with the support of the instructor, to learn about this particular course. Okay, not only for this accounting for manager, for that matter, all the course, but this demands little more of your dedication. Whenever you are free, you have to dedicate your time to this particular course. Since it is numericals or maybe something which is new to you. How many of your engineers? Many of your engineers. Okay. How many of you are BCom or BCom, BBA? Correct. A good blend of both are there. So BCom might have heard about this in your first year, second year, like that. Studied, okay, or something heard at least, or you passed the exam. You might have forgotten, or you may be remembering. But for engineers, it may be new. Okay. So to have a balance, we can go from the beginning. Some of you, if you are still remembering the concept, or if you are still working in accounting, it may be sometime boring. So you have to adjust, because we have to strike a balance between both the people. There are engineers, they may not be knowing about accounting at all. Okay, that may be new for them. They may be listening first time. Okay, some veteran accountant also may be there. So you have to adjust. If you are having any particular concept which is already there with you, that is practiced in your company, you can just participate. You can just tell. We will listen to you also. Okay, so in that way, we are going to discuss this particular course. Okay, and you also know there are 2 assignments. Okay, 30 mark each. 60 marks you'll be getting out of assignments, and 100 marks you're going to write for exam at the final exam, but that will be converted into 40 marks. So put together is 100. 30 assignment 1, 30, one more 30 assignment 2, then 100 converted into 40, that is final exam. So put together is 100 marks. Okay, so that's about your mark for all the courses, similar to accounts also. Okay, so in this background, we are having this subject called accounting for managers. Can we just assume it? Is it not visible for you, no? Yeah.
Yes, sir, it's visible.
This is okay? Yeah. Don't read verbatimly there. Course outline. This is what we are going to discuss. We will first outline the course, then we can go for one by one, right? Accounting for manager is not just accounting course for you. It's accounting for managers. We are all expecting you to be an executive or manager or some kind of work. You are already doing it. Okay, you are not going to be just an accountant out of this course. Maybe some accountant is there, but it is not expected you to create again one more accountant. It's like giving you some points which you can analyze or which you can interpret so that you can take some managerial decision. We are not teaching you how to make accounts only in this course. That is not the intention of this course. This course gives you some kind of idea or input, some kind of understanding, which will make you to analyze the accounting information or accounting data. Okay, and to look into that data in a deeper perspective and make some kind of interpretation out of that data, then make some kind of informed judgment or informed decision in your company. You may be a businessman, or you may be a person who is helping a businessman, or you may be a consultant outside and helping a businessman. Only these three possibilities are there. Anything else possible out of this particular program called MBA? You can be a businessman. You can do your own business. Okay, or you can do a job in a business in such a way that assisting that businessman. Okay, in some profile. Or sir, neither I do business nor I work for somebody. Then third one is you can be a consultant. You can be your own practitioner. Okay, some kind of advice that you are giving to some kind of business people. A business house is coming to you with regard to certain advices. That time you are giving advice in the name of consultancy. So only these three possibilities. All these three environment, we need to use some kind of data that is generated from accounting department. Okay, how accounting department is generating such data, how we can read that data, and then how do we interpret, how do we use those interpretations or those data in making some decision. With this respect, with this understanding, this course is designed for you. Okay, it's not just to make you to become an accountant. Okay, so that point you have to keep in mind first itself. Okay, we're not going to be a hardcore accountant. Okay, but we are going to understand what accountant will do, how the accounting department works, how these statements are made, how these data are arranged, or how these data are recorded. All those things we are going to understand. Okay, so with this background, I'll just take you through the course outline. Course outline of this particular course called Accounting for Managers. Yeah, we have 5 modules actually to deal with. 5 modules. This, of course, accounting is a big ocean. We are not going to read about everything. Okay, we have confined ourselves with certain units of academic delivery, academic purpose. We should have our own framework. Okay, we cannot just keep it open accounting. Then we can ask any question and we can discuss anything. That won't be serve the purpose. We need to have certain framework. Sir, within this framework only, particular course is being delivered. In academic, you call it a syllabus. So the syllabus of this particular course is given to you here. It has 5 modules. It comprises of 5 modules. The first module is about just introduction to accounting. Introduction to accounting, in which we are going to study about the meaning, definition of accounting, functions of accounting, branches of accounting, and what is the basic objective of accounting. Okay. Then who are all using the accounting information? And what is the basic principles upon which the subject of accounting is evolved? That we are going to study in the name of basic concept, conventions, or gap, or accounting standards, IFRS, and Ind AS. These are all connected to the basic framework or basic rules and regulations or basic principles upon which the accounting subject itself is evolved over a period of time. Okay, that is what a basic concept, convention of accounting, gap, accounting standards, IFRS, and Ind AS. Okay. Then we are moving on to the very important aspect in the first unit, that is called double entry system of bookkeeping or double entry system of accounting. Okay, really the accountant does some work recording of transaction that takes place in the particular concept called double entry bookkeeping. Based on double entry bookkeeping, we have to record the books of accounts. How are we going to do that? We are going to discuss there. And then accounting equation. And there are certain things called capital items and revenue items, depreciation accounting, and then accounting mechanism, how really the accounting works in the company, how it is maintained. Okay, there are some books we have to maintain called ledger, journal, trial balance, and how to prepare that. So this is about first module. It has some theoretical background of accounting, and has some kind of exercise how that theory is being applied in the practice to make the books of accounts. Okay, so before I talk about second module, I'll just ask you a few questions how we understand accounts. Okay, what is a business actually? Sorry, business. What do you mean by business? Trading is a business. Very good. Sorry, offering a product or service in return of okay, making profit. Think very simply. Okay, think very simple, right? Don't think too much. Okay, don't bring your all scientific or any other engineering techniques here. Simple, as this madam is telling, offering some product or service with an intention of earning profit, or that madam is telling creating value. Creating value is a very broad term. Profit may be a simple term. Okay, creating value to the company or earning profit. Okay, offering product or service. Any other people is having any other way of understanding what is business? Anybody? So we can take this as a authoritative understanding on business. Yes, sir. One second. Selling, selling and buying. That's what offering. One is offering means other should buy. We offered a program, you bought it. That's why you're sitting here. Yeah. Service. 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 Okay. Providing a service, right? Providing a service. But service here is nothing but intention of earning something. Service, it's not charity. Apollo is doing a service. State Bank of India is doing a service. Life Insurance Corporation of India is doing a service business. Service business. Okay, offering product or service in order to earn profit. Okay, is that clear to everybody? In that any doubt? What is this? Very simple. We already know, right? We already know, right? Reiterating it. Reiterating it. Organized effort of doing something in order to earn. Organized effort of doing something. That something can be selling a product, manufacturing and selling, just buying and selling, or rendering service. Okay, so business can be of three types. What are they? Merchandising business. What they will do? What they will do? No, merchandising business. What is merchandising? Trading. Somebody told no trading. Somebody told trading, right? Merchandising business. They do not do anything. They don't do anything except buy something which is carried in some place and just sell it in the place with the intention of earning some. Okay. Another type of business is manufacturing and selling. I don't want to buy something from somebody and sell to somebody. I myself create a product. I myself manufacture a product. Possible? They are called as doing a manufacturing business. They are said to be doing a manufacturing business. I'm not telling anything new, which all known to you. Third type of business is, sir, I neither produce nor buy and sell. I'll just provide some service to my client. Service business. Basically, any business organization, if we name, they have to do obviously any one of these three or combination of these three or all the three. Right? Combination of two or all the three. So they are called as business entities, business organizations. Okay. This is about nature of business. So before we do something on accounting, we should know about the ownership of business also. Ownership. What are the different forms in which you can own a business? What is asset? One second. Asset is nothing but something, a property, right? Business owns asset. My question is, what are the different forms of owning a business? Proprietorship? Private limited. Oh, you all know everything, then we can. Very good. Partnership? Proprietorship? One second. Some people are sitting there, they may not be knowing what is your ABCD. LLP. What is LLP, madam? Limited liability? Partnership only, no? So, proprietorship, partnership, that's all. What is no? You only told, no, LLP means limited liability, partnership. Then you are going contradictory to your statement. It's not a partnership. One second. Let us complete it. It's a partnership or not? No. Then LLA. What does that P stands for? Then you are telling it is not a partnership. Dayananda Sagar University. It's an university. She is telling no, it's not a university. Bangalore University. But she is telling it's not university, sir. It is a partnership. Limited liability partnership. But type of partnership. But it's a basically a partnership. That's all. Sole proprietorship. Only one person is there. He owns everything in the company, in the business, and he does the business. He may employ somebody. He may take some people as employee, but he is the owner. He does not share his ownership with anybody. He is called sole proprietor. The business what he is having is sole proprietorship or simply proprietorship. Sole trading concern, sole trading organization. All the names, use it. One owner, single owner. Second one is multiple owners in the name of partnership. Partnership. One of the partnership is LLP. Let us not talk about that right now, little later. Third one, what form of business organization you can have? Sorry? Private sector? Private limited? Public limited. What is that? Private limited, public limited. Companies. We can have companies. Both are coming under companies. So third one is companies. Somebody is telling there Hindu undivided family. HUF somebody told. Another one is cooperative form of organization. Yes, madam. What is that? What is that? Joint venture. Kind of partnership only. Okay. Joint venture is not a ownership form. There is one proprietorship, another proprietorship, both are joining together, forming one more proprietorship or one more partnership or one more company. Joint venture is a very colloquial term to pronounce a relationship between two entities that are forming a new entity. Joint venture is not a separate form of business ownership. Your ICICI and Lombard, these two joined together, it may be joint. ICICI Lombard is a joint venture of ICICI and Lombard. But ICICI Lombard is another company. When you talk about ownership, ICICI Lombard is a company, that's all. ICICI Prudential is another company. Okay, so company is one form of organization. It can be coming out of a joint venture, or it may be coming out of few people's effort. It may not be all the time possible. Joint venture, or sometimes own people, 5-10 people are joining together and they're starting a business organization. So only we have 5 forms of business ownership. One is sole proprietorship, partnership, into undivided family, joint stock company, and then cooperative form of organization. When I say company, colloquially we can tell is a company, but normally it is called as joint stock company. Just a company, you can say, but in law, joint stock company, joint stock. No, we are not talking about organization. No? We are talking about what are the different ways in which an organization can be owned by people. All these 5 are organization only. 1 second. All these 5 are organization only, business only, business organization only. But I'm telling about the way in which you can own the business. It's very simple. It's very minimal for us to understand. Okay, it's not a subject matter to discuss. For accounting, we need to have just one line of understanding about this. Don't go in about that. But any doubt we can now, you can clarify now, no problem. But don't think too much about that. A business can be owned in 5 forms: sole proprietorship form, partnership form, cooperative organization form. Other one is into undivided family form. Last one is company form, or you can call it as joint stock company. Joint stock company. Now you tell me something you're asking. All of you listen. When your friend is asking something, please listen. Yeah. No, but I'm not clear about what you are investing. You know, how are you investing? You are not owning a profit. You are just you are buying a company means you are going to own a small part of that company, right? You only tell me. You only have the answer in your sentence. You are buying the of company. So which form you are coming in? Company. Simple colloquial term, company. More particular, joint stock company. What you are buying is a stock. Colloquially, you are calling it as share. It can be called otherwise called as stock. You are buying the stock of a company. So you are becoming one of the shareholders of the company. So you are owning a company. You are partly owning a company. Right? Something you are asking. Yeah, same thing. Anybody? Okay, now we come to this madam's question. She was telling LLP. What is that, madam? So partnership you understood. More than one person joining together and forming a partnership. A partnership. Don't say company. You can say company colloquially without knowing this. My friend is having a company in Electronic City. Maybe possible. You can say, but company, the word company refers to a joint stock company only when you say in law or in accounting. Company means joint stock company. It should have share capital. It should have shareholder. It should be registered with Indian Companies Act 2013 or earlier act 1956. There was an act called Indian Companies Act 1956. Now that is replaced by Indian Companies Act 2013. Under this act, there are some rules and regulations. If you follow the rules and regulations and register yourself with a person called or with an office called Registrar of Companies, each and every state will have its own office called ROC. If you go there and do the formality, nowadays it's online. If you do the formalities, if they give a certificate for you, then you can become a company. Otherwise, whatever you do, you can call yourself as a company on your own. But law or business or any accountant or any other legal formalities, they won't accept you as a company. You can simply say yes and co, yes and company. Yes and company is not a company form of organization. Yes and company can be a partnership. these companies will have in their name a suffix called, last one called LTD, limited. Any name, if you find for any organization with a letter called, last letter called LTD, the word LTD, limited, in short form, those organizations all are called as companies. ICICI Bank Limited, Infosys Limited, Wipro Limited, Tata Consultancy Services Limited. Now you can check your own company, your own organization where you are working in. If your letterhead is having that word limited, then that organization is company form of organization. You cannot use that word without you register with ROC. Is it clear? Right. Now, that company, that organization does not have only the word limited. It's having like private limited or public limited. That time, it has two types. One is private limited company. Another one is public limited company. The shares of the, are you able to understand the share? Anybody has doubt in the share? Engineers, share. No, you know it. We cannot talk for we, no? No, you are not a representative of engineers. Okay, all right. I appreciate that madam knows it. Very good. If you do not understand the word, what I'm saying in between, please stop me and ask me, sir, something you're pronouncing which is not heard by us so far. Like that, if you have any doubt, you stop me there, then and there, we can talk about that. Okay, so the company's entire capital is divided into small part. That small part only is called as share. Okay, you may be a shareholder in a company, right? Now, if the company does not allow the members of the company to transfer their ownership in the company to someone else without the knowledge of existing other members, that company is called as private limited company. Only simple difference. There are many. You understand this one first right now. Okay, the company does not allow its shareholder. Who is shareholder? The person who is buying the share, who bought the share, who is having the share. Now, if he is allowed to sell the shares, what he is having in the company, without the knowledge of other members in the company to outsider or anybody for that matter, that company is called as public limited company. If he is not allowed, if he is restricted, then it is called private limited company. Now, any company name, if you see, private company name will end with private limited. ABC Private Limited. ABC Limited. ABC Limited is a public company. ABC Private Limited is a private limited company. Don't confuse the word public sector company and private sector company. ICICI Bank is an example for private sector public limited company. SBI is an example for public sector public limited company. Okay, sector is different. What is sector here? If government owns that company, at least a 50 or 51% share in the company, that company is called as public sector company. Public sector company. Public sector company can also be a private limited. Okay, private sector company can also be sometime or majority of the time public limited company. Reliance Industries Limited, RIL, is an example for private sector public limited company. So this is clear. Sector is nothing but ownership of government. RBI is having some subsidiary company. RBI. Okay, this rupee printing. I exactly do not know that exact name. In Mysore, it is there. Huh? That maybe ends with private limited. That's called private limited company. Who is the owner? Maybe a government means public sector private limited. The people are owning. All of us are owning a company means private sector public limited company. Okay, that is not the discussion for us. Main discussion. Just understand what kind of business ownership. Now come to that LLP. Limited. What is the meaning of limited here? Okay. Don't confuse much. Think very simple. Okay. Don't bring so many technical terms to explain in the beginning itself. I want to see the same seats occupied by this many people for the end. till the end. Please come. Okay. Yeah. What is the discussion? Limited. What is the significance of the word limited in the name of the company? SBI Limited, State Bank of India Limited, Reliance Industries Limited, Tata Consultancy Services Limited, Pro Limited. But with simple words, anybody can explain? Complete your sentence. Okay. Okay. Even private limited also, people are taking the shares. Okay. But in both the companies, there is a word called limited. No. Private limited also is having a word limited. No, we are not talking about what's the difference between private limited and that I already explained with only one single point. Though there are so many points, I want you to know only one point. That point I already let you. Okay. My question is, why companies are using this word called limited, either private limited or public limited? Public limited means just limited. Private limited means they have to say private limited. Okay. Yes, true. True. No, my question is, of course, you are bound to do that, you are doing. Company law says you to use, once again. You to use, you are using. My question is not that. Who is saying? My question is, what is the logic behind that? Is that any information that is communicating to the general public just to see that name? Just at seeing that name, I am understanding certain things. One second, that boy is, that sir is raising a hand. Yeah, somebody here. Yeah. What can you just give an example for that? All of you, please understand. The word limited is signifying that the liability of the member is limited to certain extent. He is telling, we buy that. We buy that. We take it. But we want some explanation with some example so that we can understand better. Yes, sir. You are buying shares of a company for 1 lakh rupees. Good. What is that? Your liability is limited to 1 lakh. One second. Okay. Company is wound up. Company is closed. Are you able to understand? Suppose there is a company called A Limited. He has purchased shares in A Limited. Up to this, were okay? Sentences. He bought by paying how much? 1 lakh rupee. How many shares you bought? Say, for example, 5,000 shares he bought. 5,000 shares he bought from the company by paying 1 lakh rupee. He is having now 5,000 shares with him. One fine morning, what happened? The company got into insolvency. The company is closed. The company is having insolvency. What is insolvency? Okay, something we can buy that word, out of fund. Okay, that makes sense for everybody. That makes easy, right? That is easy. The amount what you have to pay to people and amount what you are having is not matching. You have to pay 2 crore, but you are having only 1.5 crore. But you are going to close the business. You closed it. Now you have to pay to many people. Many people's due from the company put together is 2 crore in this example. But all the things, whatever you had in the company as a property, you realized it. You sold it. How cash available is 1.5 crore. Now there is a deficiency in payment. How much? 50 lakhs is the deficiency. Now there are so many shareholders like these gentlemen. There are so many people. So many people. Yeah. Okay. There are so many people to whom you have to settle. And there are so many people who are the owners. Now all the owners already bought some shares. He bought for 1 lakh. Now he is saying, I should not be called by the company to pay some amount proportionately. Suppose there are 3 shareholders only, for simple example. Okay, 5 shareholders, including him, 5 shareholders are there. Including him, 5 shareholders. Now, company should not call these 5 shareholders, bring 10 lakh rupees each to pay off the dues to the people, which is insufficient from the company, 50 lakhs. If it is called, if it is allowed to call, if it is possible to call, then that company members are having unlimited liability. Unlimited liability. If it is not possible to call, in the beginning itself, the setup is like that. The agreement is like that. Then he should not be called, or his other shareholders also cannot be called to pay that individual 10 lakh rupees from his personal property. But he might have been in the company for many years. He might have taken so many profit over a period of time. That does not matter here. He is not called to pay. He should not be asked to pay, contribute any money at the time of closing the company if there is any shortage of money to pay to outsiders of the company. So this concept is called limited liability. It is not just loss. Is it a loss? It's not a loss. It is bankruptcy. Actually, it is final day. You are closing the company and you are telling hereafter we are not a company. We are disassociate. These 5 members are going to disassociate. So far they have associated with each other in the name of A Limited. Now they are going to disassociate. Okay. It is not just a loss of 1 year or 2 years. It is a accumulated thing. Maybe from last 4 or 5 years, it might have been occurred or any reason. We don't know what is the reason. For that, we'll understand the next unit called analysis of company's statement. Okay, come back. So that cannot be asked to be borne by the people, the shareholder. Okay, that concept is called limited liability. But I have a question to you. You bought how many shares? 5,000 shares. 5,000 shares? 5,000 shares. By paying 1 lakh rupees in total. In total. But you are getting a notice stating that you have to pay this much money. Since the company is closed, company is having a shortage to pay. So you have to bring this much money. Like that you are getting a notice. But your company is a limited. How do you react? He is getting a notice. Yeah. Yeah, I'm asking. The first case settled. We understood the limited liability concept. Now, even though the company is a limited liability company, even though you paid your 1 lakh, he is getting a notice stating that company is having a shortage of 50 lakh, company is going to be closed. Please bring this much money. Maybe say, for example, bring 50,000 rupees. Some notice is coming to you. How do you react? This madam is telling it is not applicable. Anybody thinking?
Limited. So
Yeah, limited.
not will pay any.
That's what I will ignore the notice. It's not applicable. Okay, anybody? But I am sending a notice legally to you. You will file a case? You are not understanding the concept of limited liability fully. Limited to what extent? Limited to what extent? Suppose the shares are not fully paid. You bought a share. Share value is given there, 100 rupees. But the person from whom you bought the share already paid to the company only 80 rupees. Only 80 rupees he paid. The total value of the share is 100. What you paid 1 lakh rupees is not the price what you are paying to the company. You are paying to someone else who is giving the share to you. It is between you and another investor. In the share certificate, it will be mentioned how much amount is subject to be paid, how much amount you paid. Whatever you're paying to another investor is not the money we are calculating here. The agreement between the share and the company is mentioned in the share certificate. How much is the value of the share? Face value. How much was the issue price? Technical. You are also in face value. Face value means nothing but The value written on the face of the document. How do you know 20 rupees note? It is written on the notebook, the note 20. How do you know 200? 200, sir, one more zero is added. 200 is there. 200 is written on the note face. So that's why it's called face value. All currency within India, all Indian currency within India is traded for face value. I'll give you 10 rupee, you'll give 5 rupee note to me, face value. But company's equity share, company's share, forget about the word equity, I take it back. Company's share can be traded for more than the face value or less than the face value, depending upon what company is doing, demand and supply. Okay, now you bought a share whose face value is 10 rupee, but the person who sold it to you has already paid only 8 rupees. Remaining 2 rupees is still pending. What is wrong in it? You are having one house constructing, half over. You don't want to continue further. Can't you sell it to somebody? Can't you sell it to somebody? Provided the buyer is agreeing this, okay, it's half house, I'll take it. He taken half house. What is that? Who is that? Who is that? SEBI means what? I'm asking for those engineers only. SEBI means Securities Exchange Board of India. What is there? Let it be there. What it is doing? It is there to regulate capital market in India. Suppose I'm giving you one fake certificate. Infosys equity share certificate, I'm only printing. I'm giving to you, collecting 1 lakh rupee from you. You are telling that you bought the share certificate from me. For this, who is responsible? He will go on compliance. So also came to me and given the certificate. Later I came to know it's a fake certificate. I paid 2 lakh rupees believing that's a real certificate of Infosys company. I bought the share of Infosys. But later I come to know I got cheated. So please come in interference. Please look into this fellow. For that, who is coming in picture? SEBI is coming into picture. I am selling a half selling a half constructed house. You are okay for buying a house. House is there. You saw the house. You inspected everything. You paid money, 1 crore. I bought the 1 crore. I just registered in your name. House is sold to you. In this case, no SEBI should come into picture. You are not getting cheated, right? You know what is this? There is a real company called Infosys. You bought a share from Infosys long ago. Till Infosys did not call you to pay the remaining 2 rupees. It is not the matter you did not pay. Infosys did not call you to pay the money 2 rupees. It was telling 8 rupees enough right now. Give me only 8 rupees. I'll give you 1 share. For whom? The seller. To this, that seller was buying from the company by paying 8 rupees. If the Infosys is asking to pay the remaining 2 rupees, who has to pay? Now who is the owner? Now who is the owner has to pay. That's it. That's called partly paid. Just 1 second. Just one second. Hold on. Now, if that is the case of the share, what is having? The company is sending a notice. That is valid, legal. That only 2 rupees has to pay. So understand the logic of limited liability. Limited liability is nothing but the liability of the shareholder is limited to the extent up to which he has agreed to pay. Not how much he paid already. How much he agreed to pay. He has agreed to pay in the share certificate. Share certificate is a written document. Nowadays it is in digital format. Demat account it is there. But really speaking, if you want to get it, you can get it. It's a written document in which terms and conditions are written. The company has signed. You agreed to buy. So to the extent of how much the shareholder has agreed to pay, that is called limited liability. Now tell me. Yeah. Yeah. Now seller has not paid 8 rupees. Yeah, correct. The seller has paid 8 rupees for 1 share to the issuer of the company. Yeah. Face value as well as the selling price in our example. Yeah. Yes. No. See, you have to understand another 1 point. Face value is just an indication that nominal value. But company at the time of selling, and 10 rupee face value, the share may be sold for 150 rupees. The share may be sold for 200 rupees. Whatever it may be the price. That is called selling price, issue price. On the issue price, that's called agreed price. On the agreed price, if that seller did not pay the full money, or the company did not ask the full money, suppose it's 150 rupees. Face value is 10 rupee, but selling price is 150. The seller of him agreed to pay. But company was asking only 100 rupees you pay right now, 50 I will collect it from you later. That's also again called partly paid up share. Who has bought it is having a liability to pay the rest of how much?
ಏನಾಗೈತಂತೆ?
Yeah, 50 rupees to be paid by the person who is having the
ಎಲ್ಲಿ?
to the company.
ಬಚ್ಲು ಮನೆಲ್ಲ ಎಲ್ಲಿ?
Gentlemen, please mute your mic if you are not talking to us.
ನಿಲ್ಲಾಗಿರ್ಬೇಕು ಸಕ್ರೆ ಹಾಕ್ರೇನು ಅವತ್ತು ಇಲ್ಲ ಆಗಿತ್ತಲ್ಲ ಹಂಗಾಗೈತೇನು?
He does not know. Please don't talk. I laugh. Yeah, all right. So those who are not talking to us, please mute your mic. Yeah. All right. So this concept is understood. Okay. So why I'm talking about all these things in detail is, as an accountant or as a person who is reading the data of company or an organization, should first know these two things: what business organization they are in, what business they are doing. These two things are very important. Suppose a person is coming to your doctor, a patient is coming to your doctor, okay, or a person is coming to your doctor, two are going to your hospital, okay. The doctor is coming and putting thermometers on both the people's mouth. One is a real patient, another person is just an attender for that particular patient. You are all doctor now. After doing this course, you are all going to become a doctor of a company, doctor of a business organization. So before you treat any patient, what should you know? You should know the patient first of all. What for he has come? He's come for delivering a milk packet, or he has really come for a treatment. You should know. After you know that he is a patient, you should know what kind of disease he is having. Sir, I have some CT scan machine. Immediately when he comes, take this CT scan. No use for the patient. For you, it is useful. Sir, I know all these things. I want to do it. I want to experiment. Please don't experiment in the life of a poor patient. So you should know who is your business organization. What is the business organization? What business they are doing? We all have some kind of logic, no? Heartbeat range how much? Normally 72 to 80, that range, normal. Okay. Pulse, okay. Pulse. And then sugar level, glucose level. Some range is there. For everything, we have some kind of standard. You are sitting in 11th floor. Doctor is sitting in 11th floor. Patient is coming from the ground floor. There is no lift working. He is climbing and coming to the 11th floor. He is testing the pulse. It is 200. You take him to ICU. So please, I may say little very colloquial term, but please understand the logic behind that. You are testing the data. You are using the data. You are using some standards. In accounts also, we have some standards. Okay, the company should have this much profit. Okay, 2 lakh is the profit expected from this company. During Corona time, only 1 month the company worked. Profit is only 200 rupees. Immediately you are writing a interpretation. This company is not doing well. Change the director, change the MD, change the employee, change the manager. Is that correct? So please keep that in mind and look into the various concepts. Okay, so we are going to discuss accounting for only joint stock companies. Though there are so many organizations we discussed, okay, we are going to discuss in this class for the next few classes only for company form of organization, because it has lot of money involved in it, and many people are coming together and joining together and doing a business. If anything happens in a company form of organization, that affects the entire economy. Look at the Adani's case. Okay, Adani's case. Okay, so if it is happening in one individual case, nobody will bother about it. It's Adani group of companies. That's why government is bothering. Congress is raising question in the parliament. and ruling party is answerable, and he himself is answerable. Okay, SEBI is answerable. The inquiry is going on in SEBI. Okay, SEBI. He told us somebody SEBI. Now, how the valuation of Ambani Group has gone up to this level in last 4-5 years? Okay, that is the market economy. Actually, market economy. I am buying, you are selling. If we are both are agreeing for a price, no one to interfere. But if it is going beyond certain level, if it is seated in the public economy, then SEBI, the rule, the regulating authority comes into picture. Regulating authority comes into picture. That's why we are going to study only about which one? Accounting of joint stock companies. Okay, the second model, look at this. It's about the statement. It's about the statement of, somebody told profit, in the beginning, right? Somebody pronounced the word profit. Who is that? What is profit? One. Anybody from online can answer? What is profit? Anybody who is online, can you hear us? Can you confirm that you are able to hear us?
Yes, sir. It is audible.
Yeah, please. What is your guess about the term profit?
The profit is a term which is relating to the actual extra margin that a company makes after deducting the functional pricing.
I already told you, make it very simple. Don't confuse us. Actually, me, a person who do not understand all your high terminology. One second. Let her just, I have commented her answer. No, let her complete it. Yes, madam. What do you mean by extra margin? You told something extra margin, no? What is extra margin? Madam, are you online?
Yes, sir.
Yeah. Can you just put a very simple words? What is profit? Engineers are there. So please make it very simple. One second. Anything you want to say, madam? Okay, one second. Hold on. One person from offline class raising hand. Yes, sir. Total cost minus selling cost. One second. Don't get immediately some. Total cost minus selling cost. Selling price. You are minusing selling price from cost. If it is minus, that's called a profit. Correct. You are right only. Cost minus selling price is equal to minus means it's a profit. Correct. I bought this for 100 rupees. I'm selling it for 120 rupees. Cost is 100. Selling price 120. 100 minus 120 is equal to 20 minus 20. It's a profit. In that way, he's telling. But it's confusing, no? We can just go in another way. How do we go in another way? Sales minus cost. Sales, the value of sales, minus the value of cost. How much you spend to make it, or to create it, or to have it? 100. How much you get it out of disposing it? 120. So 120 minus 100 is equal to, all of you please write down a basic equation in accounting. You know always equations, right? Engineers or mathematicians. Yeah, equations, right? So I'm telling in that way. Profit is equal to sales minus cost. Or we can say, one second. Or we can say revenue minus, one second. Revenue minus expenditure. Revenue minus expenditure. Income minus expenditure. Income minus, we can have this finally. Income minus expenditure. Profit is equal to income minus expenditure. It's one basic accounting equation. Income minus expenditure. Yeah, something you are asking here. Yes, sir. Somebody was asking when I was talking. Yeah, please. Why not? Have it. Selling price. He's telling about selling price. Selling price minus cost. In my case, selling price 120, cost price is 100. Cost price. I paid price. No, that's also price only. I paid 100 rupees to my vendor. For me, it is cost price. I sold it to my customer 120. It's a price for me. It's a selling price. Selling price minus purchase price or buying price. Could be profit. No matter. Understanding is clear. Okay, but we write like this only. Profit is equal to income minus. Is it clear? So if you have only one income like this 120, only one expenditure like 100 rupees, we can go with this, sir, 20 rupees of profit. Easily I can understand. Easily I can identify, find out. But in a company or in a business organization, there are so many incomes are happening. There are so many incomes are happening. There are so many expenditures are happening. So that need to be memorized. But it is not that much possible to memorize all those n number of incomes and n number of expenditures that happen in a particular period of time to remember. So I don't want to remember. I want to record it in books of accounts. There only accounts comes into picture. Okay, this n number of income and n number of expenditure we put together. Always we cannot say income, expenditure, income like that. We put a common name for that. I'm very much hating these two words. Please don't use that word unless otherwise I use first time. Up to then, you please don't use. You are the people making others not to come to accounting class. This debit and credit, just remove that words. From the minutes, the two words are removed as of now. Whenever we need, we bring that. Up to then, please forget it. Who knows it? Who do not know, please don't even attempt to pronounce that word. Yes, I'll tell you why later. Okay. We put a common term for this, a transaction. Transaction, right? Whatever is happening in a business organization, which is involving in money or money's worth, that can be called as event, transaction, economic activity, simply transaction. So there are n number of transactions that are expected to happen in the business that cannot be memorized or that cannot be remembered by our human being. So we need something to be recorded. What are the income? Sir, I sold one remote control today, 120 rupees. Yesterday, two remote control for 240 rupees. All these things need to be recorded. So that is what we are going to do it in the second module called financial statement. We are going to prepare financial statement. This income minus expenditure is told very simply, but it need to be written down all the income, all the expenditure. Okay. Right now, I'll tell you another question. Suppose you started a business by investing 1 crore rupees. You brought 1 crore out of your hard-earned savings. You have worked for some company so far after 15 years. You saved 1 crore. You managed to bring 1 crore. You started one business. You bought a building. Please all of you listen carefully. You bought one building which is worth rupees 80 lakhs. You bought some materials. Suppose say for example some remote control. You bought it for 20 lakhs. Only two transactions you did in the business. One is buying a building, remote controls, materials you bought of 20 lakhs. Now, third one, somebody coming there asking for remote control. You sold remote control for 30 lakhs. You sold remote control for, I repeat this word, you sold remote controls for 30 lakhs. Now you tell me what is your profit? What is your cost? What is your expenditure? What about the 80 lakhs? One by one. That is my asset. Okay, so our accountant, good. Yeah, you understood one concept very clearly. I asked this question in another class. They told, sir, you're not understanding why it is profit is 10 lakhs. Explain to him. One second. Pause it. You understood the story? What I narrated. Okay. Forever. I bought. income is 30, expenditure is 20, excess of income over expenditure is 10. So he's telling 10 is the profit. But this gentleman is disagreeing. We will listen why he is disagreeing. Yes, sir. Why are you disagreeing? This, what we have done is measured the income. He measured the income. He measured the income as 30. He measured the expenditure as only 20. He measured the profit as 10. Excess of income over expenditure. But he is having a problem there. Sir, his measurement is having some trouble. His measurement is not exactly correct. He's correcting us. Let us listen. Yes, sir. Can you pronounce that word once again? All of you understand that word? Depreciation. What is depreciation, sir? I bought one building to reside in 2010 for 15 lakhs. Now I have kept a board to sale, but people are coming and asking for 40 lakhs. In our case, building only, no? Let him come. Yes, sir. I don't own any site in this case. I own only. One second, sir. One second. Okay. Bulldozer we don't have. Every bulldozer has gone to some government. Don't demolish the building, madam, please. We are trying to construct something. What he is saying is exactly correct in accounting. Okay, just for counter arguing, I just raised that point. Of course, asset can be appreciated, asset can also be depreciated. Okay. In this case, if you feel that there is a depreciation, there is a reduction, but depreciation, the definition you can change it little. The reduction in the value of asset is telling. But my point is that part of expenditure from the asset, what you have to charge as expenditure for current year. The building is bought for 80 lakhs. Suppose this building is to be used only for next 100 years. This building can be used for next 100 years. After that, the value of building, just assume the value of the building is 0. Or replace this asset called building to machine. That will be making more sense for you. Okay, machine I bought for 80 lakhs. I produced by spending 20 lakhs these remotes and I sold it for 30 lakhs. Now this machine can't be used forever. Can be used for some longer period of time, but cannot be used for ever. Suppose the value of this, the life of this machine is next 8 years. The value of the machine is next 8 years only. At the end of the 8th year, the machine should be scrapped out just for 0 value. Assume. Okay, 0 value. Now you tell me what is the profit? Correct. What is, okay, 0 or not, we will check it. Who's told 0? Yes, sir. Explanation. Yeah. 8 years. Per year, we have to charge as an expenditure. Sold for 30, production cost 20, depreciation cost 10 lakhs. So total cost is 30. Total revenue is 30. 30 minus 30 is equal to 0. 0 is the profit. Are you able to understand this? Don't talk much. He's telling some other concept. Don't do that. Keep it in mind. Okay. Keep it in mind. Don't talk outside. Only for the question. We have to go slowly, one step by step. Okay. Don't confuse much. Okay. So are you able to understand the SAR's message? Right? Both put together. Yeah. Yes. Yes. So what he is saying is, we sold it for 30 lakh rupees. We spent 20 lakh rupees to make it. Profit was 10 lakh. We already identified by this, sir. We are having some problem in that, so we are correcting it. Now, the machine, what I bought it for how much? 80 lakhs. This machine can be used only for 8 years. Now, what is the cost of the machine for 1 year? 10 lakhs. Is that understandable? That 10 lakh only, this gentleman is coining a term as depreciation. So what is depreciation? That part of fixed asset. I'm introducing one concept. That part of fixed asset. What is fixed asset here? Machine. What is the cost of fixed asset? Total 80 lakhs. That part of fixed asset that need to be charged as an expenditure for the current year is called depreciation. What is that part here? 8 lakhs by 8 years. Why it is 8 years? The life of the machine is only 8 years. Though it is today 80 lakh worth, though I bought it only for only in current year, but I'm going to use it for 8 more years, including this year. So every year usage cost of using that machine is 8 lakhs, sorry, 10 lakhs, 80 lakhs by 10 years. Cost of asset divided by number of years of the life of the asset, 10 lakhs. So total cost is, making cost is 20 lakhs. Depreciation cost is, but I did not pay to anybody. I bought the machine by spending 8 lakhs. That's it. I'm not going to pay again 10 more lakh to anybody. So that is not a cash outflow. It's just an assumption, just a concept in accounting. If you do not do so, but one fine morning you need some money to replace this asset, right? After 8 years, you need to install one more machine. For that, you need money. For that money only, every year you keep it aside from your, from your expenditure. So this concept is clear to you? Depreciation included in total cost of the current year making. Profit is 0. In your account? No, you are having 30 lakh rupees. Yeah. You brought 1 crore cash, 80 you given to a vendor to buy a machine, 20 you spent for making this. Okay, and then you sold this and you got 30 lakhs. Now in your account, how much is there? Yeah, your question is?
30 lakhs is there.
But according to the profit, 0 profit.
0 is the what is this?
Good question. Anybody? Very great. So first, before you think anything, from his sentence, from his question, I want to make one statement to understand. That is, just looking at now in this company, how much cash is there? Just looking at the company cash balance, you should not come to a conclusion that this company is good company or bad company. There may be another company having 0 as cash balance, but their profit may be 1 crore, 2 crore, we don't know. We have to check that. So this gentleman is telling, sir, 30 lakh is there in the bank account or in the cash. Ready cash is there, 30 lakhs. If income tax comes, 30 lakhs is there. So what do you call these 30 lakhs? This 30 lakh is nothing but cash. That's all. Cash, that's it. You sold it for cash. Cash is there. Suppose your customer has paid in your bank account. It's a bank balance, that's all. Bank balance. So point you have to make from this understanding is cash balance of a business, profit of the business does not have any connection. Does not have any connection. Since a company is having a lot of cash balance, you cannot appreciate the company is having a lot of profit. Other way also, the company does not have any balance. The company is having very poor cash balance. You cannot say the company is doing very poor in its profit. You cannot say. There is no logic behind that. Is that clear? Yes. Any other doubt in this? Okay. The other point what I want to make here is, now you told one machine we bought that should not be included in the cost of the 80 lakhs should not be included in the cost of this current year, expenditure of the current year. Then what is that called? Asset. This is called asset? Yes, this is also called asset. But this is not kept in your company for longer period of time. If you keep this for a longer period of time, that company is a very, very poor performing company. The remote control, what you are making in your company should be immediately, sir, it's coming from the manufacturing business. Just customers are taking and going. That company is good company, first of all. Profit or not, that comes later. If you give this worth rupees and 1,000 rupees, you are giving for 100 rupees. Even before the production is taking place, people will come and stand there. Sir, give me. That is different story. That is different issue. Okay, that's what efficiency of the business, profitability of the business. Now, what you are doing is it's immediately sold. Okay, so this is also asset, but this thing is not kept in a business. The intention of keeping this thing in your business is not for keeping it for longer period of time. The intention of keeping this good, this is called good, no? Goods, correct? In your business, it's a goods. In your term, inventory, you may call it as goods, finished goods, output. Okay, this intention of keeping this in your business is not for keeping it forever. The intention is just to showcase this and make the people to buy this. So this is called current asset. Current, it's in current, it's in movement, it's in flow. Anytime it can be converted into any another form, mainly maybe cash. Clear? So these kind of things are called as current asset. The machine what you're keeping in the business is not for just selling, just for making your capacity increase to make this product. So that is called long-term asset or non-current asset. This is current asset, that is non-current asset. Clear? Okay. Now your business is going very well. 1 crore you invested. 8 lakhs already gone to machine. Only 20 lakhs is there that you are making your production process. Okay, that you made and you sold it for 30 lakh rupees. Now 30 lakh is in your hand. Again, you buy raw material. Again, you produce this. But you are finding there's a good opportunity in the market. You want to increase your capacity. This machine will produce only 1 lakh unit. But market demand is there 2 lakh units. So you want one more, how much? One more 80 lakhs to install, one more machine provided you are having a place. Otherwise, you have to hire another unit, another building also. I assume there is a place for putting one more machine. You are buying one more machine, but you don't have money. What to do? Simple. If you don't have money, in our first standard, they might have told, no, 7 minus 8. Not able to be minus means you have to borrow one thing from the previous digit. Okay, 17 minus 8 is equal to 9. Likewise, there are people standing in so many places, or they will call you also. We are giving loan. Can you come and collect it? Okay, without any kind of formalities, documents, we will give loan. But later on, they will complain. Sorry, you did not pay. But anyway, you are going to borrow money. How much? You can borrow from a bank and go and give that money to the vendor of the machine. You can buy the machine, or else you can go to the vendor itself. Sir, I don't have money. I bought one machine from you by paying 8 lakh cash. I'm doing a business. Because your machine, everything is going good. Why don't you give one more machine? I'll give you money later. Or I'll give you installment. Yeah, somebody say installment. Every year I'll give you 1 lakh or 10 lakhs, whatever it is. Okay. You are asking. Now you're buying one more machine. What is that called? Additional machine, fixed asset. So your machine has become 2. Originally 80 lakhs minus 10 lakhs. 70 lakhs is the original value of the first machine. 70 lakhs is the value of first machine. 70 lakhs. Second machine value is 80. So total machine is now 1 lakh 50. So 1 crore 50 lakhs. 1 crore 50 lakhs. But now how much you introduced? How much you introduced originally? 1 crore in your business. Okay. Now, after buying this machine, how many assets are with you? 2 machines are with you, and no building. We changed it. Example, no. Changed it. The example changed, not demolished. We changed the example. 2 machines are there with you in a rented building. And what else is with you? Cash, 30 lakh is there. 70 lakhs worth of machine 1, 80 lakhs worth of machine 2, plus hot cash, 30 lakhs. Totally how much? 1.8 crore. Any doubt in this? No. Yeah. We assume now we are living in a country that is not having a tax. For time being. I will introduce tax later. For basic understanding, we'll keep, at least for some time, let us all be happy. No tax. Assume there is no tax. Okay, now how much? 1 lakh? 1.8 crore is your total assets. In this, one is fixed asset, long-term asset or non-current asset. That is machine. Machine 1, machine 2 put together machine. Worth rupees 1 crore, 50 lakhs. 50 lakhs. Plus non-current asset, that is, sorry, that's current asset, that is short-term asset, 30 lakhs hot cash or bank account. So 1.8 is this side. How much you brought into the business? Only 1 crore. How it has become 1.8? Is all this 1.8 is your money? No, how much is your money? 1 crore, 10 lakhs. Makes sense. 1 crore you brought in. 10 lakhs is an amount of depreciation, but not given to anybody. It's still in the business. 1 crore, 10 lakh. Suppose today you close this business, how much you can take back? 1 crore, 10 lakhs you can take back. Remaining is 70. Remaining 70. Only 70 is liability. 80 is liability. Okay, this 10 is just depreciation. We recorded it in the books of accounts. Okay, that is non-cash item. It does not go anywhere. Okay, so 1 crore is your money. Remaining 80 crore is 80 lakh is when vendor's money, use it by you in your business. That is called liability. Can we say? That makes sense? Liability. Okay. So now your money capital introduced by you is just 1 crore. Okay, 1 crore. 1 crore. So 80 lakhs you borrowed from somebody. Okay. So another equation what you can make now is write down. Assets are equal to equity plus liability. Equity plus liability. Equity plus liability. Equity plus liability. What is equity? Asset, you are understanding. What is asset? Simple, I told you, very, very simple you have to say. That I like. Anything. Asset is nothing but anything. That makes a lot of sense. Anything what the business owns, what the business controls, or what the business owns, and having value. Having value, monetary value. In expectation of generating some revenue to the company, you are owning that. Anything that is owned by the business in expectation of generating some revenue to the business and also having some monetary value can be called as asset. That can be either fixed asset or current asset. Please understand one by one. Fixed asset or current asset. Fixed asset can be otherwise called as non-current asset. Current assets can be otherwise called as short-term asset. Short-term asset. Long-term asset, short-term asset, current asset, non-current asset. Fixed asset. Okay, right. Now in this equation, we have two more terms. What are they? Equity and liability. Liability, what is liability?
Anything which I
Yeah, burden. Okay, sometime it is not burden, no? Okay, burden. If you are really a person who wants to pay back, it's a burden. Yeah, but that's a very qualitative aspect of defining, accounting term. How do you define? Somebody was telling, sorry, but again, I don't want to take only from him. Anybody? I already told you, Yes, something. Loans is an example for, but what is liability? Which we have to pay. The value, what the business has to pay. So what the business owns is liability. What the business owes to other is liability. What the business owes to others. The value that need to be settled by the business to outsiders is called liability. In our example, the outsider is machine vendor. 80 lakhs we have to pay the machine vendor. So what is equity? Okay, again, before going to that, liability also can be classified into Two categories as we did for asset case. Short-term liability, long-term liability. Suppose this vendor is telling, sir, I don't want EMI from you. You take 6 months time. After 6 months, you have to settle my 80 lakhs. If this is case, this is called short term. What is short term and long term? Manmohan Singh's term in long term, all are debt, he is telling. Remember? In monetary, that demonetization discussion, he was telling, in the parliament. Okay. Organized loot. He was telling so many statements. Last statement is telling in long run, all are debt. In that case, then what is short run and what is long run? How do we define it? 365 days is a short term or long term? It was less than 1 year. 365 days, 1 year, no? Is it less than or equal? Okay, so less than or equal? Up to 1 year. Up to 1 year. Nobody defines this. We are only defining. The custom. That's what accounting has, some concepts and conventions, right? Ourselves, we come to a common consensus. That is called assumptions. So one of the assumptions is this one. Up to 1 year, if the due is there, that is called short term. More than 1 year, the due is there, it is called long term. So liability also can be short term liabilities, long term liabilities, current liability, non-current liabilities, current liabilities. Example for current liability is within 1 year or up to 1 year, if your liability is due to pay electricity bill, not paid on the date. It's an example for short-term liabilities, current liabilities. Current liabilities. EMI. So you'll pay after 1 year EMI. EMI means what? Monthly installment. Even EAI also short-term liability. EAI. What is EAI? Equated annual installment. Companies will not go for EMI. You, me can go for EMI because your company is paying for you or my college is paying for me monthly. So our monthly inflows are there. We can go for monthly outflows. But companies may sometimes go, majority of the time go for EAI. 1 year once they'll calculate profit. How much ever is there, they'll pay to these people EAI. Okay. So 1 year. Then what is the example for long term? Suppose you're borrowing money from a bank for a 5 years period of time. Long term. That's why it's called term loan. Term loan. But interest on term loan is short. Every month you have to pay interest. Okay. So this is the classification of liability. Fine. We have one more variable there. Equity. What is equity? Sorry. Okay. Anybody? Better. Sorry, sir. Sorry, sir. Once again. The money available after selling the assets and clearing the liability. Yeah, correct. In the equation, you can see mathematically, E is equal to, in the given equation, E is equal to, equity is equal to A minus L. He is telling that in a sentence. Excess of asset over liability is called equity. Mathematically, 100% correct. Little more theoretically, accountingly. Any other? Same thing, same logic. You tell it in different sentence. That makes sense about some understanding on accounting and business.
Number of shares issued by the
Excellent.
company.
Once again, sir. Yes, sir. Somebody online, please go ahead.
Number of shares issued by the company to
Okay,
the
I
public.
would like to just differ from you. Please don't bring the shares here in the equation called equity. Okay, this equation remains good for all type of your business ownership. Sole proprietor, partner, HUF, joint stock company and cooperative. All business organization may have this equation holding good for every time. So it is not about, don't look at the word equity. Become students or BBA. You might have studied equity share. It does not have any connection with your equity share. It's just an equation for any business organization. Only shares will be there only for whom? Among the 5 business organization, share is only available with company form of organization. Remaining 4 organization may not be using the word share capital, share, nothing. But all the organizations should follow this equation. That's called Asset is always equal to equity plus liability. So please don't confuse the word equity share with this word equity. I like that sentence. I like that two words what you told. What is that? Owner's fund. Simple. I want simple answer only. No confusing. Same thing. What sir told is decoding into simple word. What he was telling, sir, we have so many assets. We are selling all the assets. We are getting money. All the money we use it for settling the liabilities. If there is anything remaining, that is my money. Whose money? That is why he's telling owner's fund. So equity is nothing but book value of owner's claim in the business. Book value. Now this equation is only for theoretically. We are not selling the business now. Are we selling? No. Any day we don't sell. One day we may sell. The intention of starting a business is not to sell the business immediately. Intention of starting a business is to just earn profit. It's not to sell the business. So this is not possible all the time, selling and settling. But theoretically, we can speak how much is there in my book, how much is there in my paper. Okay, so excess of asset over liability, or you can say owner's claim in the business. Book value of owner's claim in the business. Okay, now what is the owner's claim in the business in our example? 1 lakh or 1 crore or 10 lakh, what, how much? Only 1 crore. Only 1 crore. Of course, if you close it today, you will get 10 more lakhs extra because of we kept some assumptions there, business not having tax, business having depreciation, all those things we have. Assumption. We'll come to that a little later when we go to this. So these two equations are going to be studied in this particular module called financial statement of the company. These two equations will be prepared in two separate statements. If you prepare the first equation in a statement form, that statement is called as where it is statement of profit and loss, or else you can call it as income statement. Clear? Income statement, otherwise called as statement of profit and loss. Very, very important statement of a business. From which what you can understand, from which what you can know. Sorry? 1 second, let her complete. The equation is there with you. Anywhere we return financial status. What is statement of profit and loss? These. Don't think something out of your own thing. Just come to me what I'm saying, you think. What I told you, the first statement, if you prepare the statement form, the first equation, if you prepare in a statement form, that is called. Then what do you know from the profit and loss account? That's it. Profit or loss. That's all. Now, why do you think something? Financial position, financial thing, asset, liability. Nothing. Don't confuse yourself. Nothing. Simple. Accounting is simple. You are thinking too much about accounting. That's why accounting becomes something difficult for you. Then later on, next class, you will say, sir, accounting is not understandable. So far, anything is not understandable to you? Yes, sir. I can say no, sir. No. He was having a teacher, always he's asking a question for yes. So he told yes. Okay. All right. Right?
Sir, I just want to understand, reiterate the thing of income statement. Income statement gives us the report of profit and loss. For this, we'll be using the statement of profit is income minus expenditure. Using that, we'll be making a statement, is it?
Yes, what is your understanding is correct.
Okay, thank you.
Statement that is letting us to know about the performance of the business. That is nothing but profit or performance means profit or loss. Performance means profit or loss. Is it clear? We are going to prepare that in the next coming classes. Which one? Statement, income statement, or statement of profit or loss. Now we have second equation, right? You have second equation, right? What is that? Always in a business, at any given point in time, assets should be, the total of assets should be equal to the sum of liabilities and equity. If you prepare this equation in a statement form, that statement should be called as sheet. Otherwise, you can call it as position statement. Some people may call it as position statement. Okay. From balance sheet, what you can understand? Balance sheet is nothing but a statement which contains equity, liabilities, and assets. Okay. It can be otherwise called as position statement. So from balance sheet, what you can understand? Sorry? Somebody is telling something. Where you come from? So far, we have not used that word at all, no? Just now I told you, my humble appeal to all of you. My humble appeal to all of you, don't think too much. Don't think out of the box. Morning, your teacher might have told, think out of box. Correct? OB, AB, all B's will tell you to think out of the box. Creativity, innovation, do something new. But I am against that. You have to think only within the box. I'm not joking. Somebody already laid the road. If you want to go from Electronic City to Tumkur Road, already road is ready. Only 40 rupees is required if you go in bike. 100 rupees is required if you go in a car. That's all. Go there, toll will be there, pay the toll, just ride or drive, reach the Tumkur Road. That's all. You don't want to lay down a road again. Road is already there. For this subject, road is already there. You need not invent anything. Don't reinvent the wheel. Wheel is already ready. Use the wheel. Understand the wheel, how the wheel is working. If there is a repair coming to this wheel, suppose the vehicle is not moving. What is the problem in the wheel? That's what you have to check. We are not going to find out a wheel, or we are going to invent a wheel. That is different. That is later. First you understand within the framework. Accounting has a framework. So did I use the word gross profit? No. So please don't use that. Up to now, don't use it. Since he touched upon that concept, I'll just say gross profit is not the concept of these two. Okay, I'll tell you about that little later. Gross margin and net margin. Okay, just some cost you're minusing from sales, you're getting some excess. That excess is called gross margin. From the gross margin, you're minusing some more expenses. Then you're getting the real net margin. That's called net profit. But that is not the job of whom? Balance sheet. The job of balance sheet is let you know the financial position of the business. That's all. That's what I told her. Another name for balance sheet is position statement. What position? Financial position. So basic objective of accounting is, what is the objective of accounting? To know the financial performance and also to know the financial position. That's all. Yes, sir. Financial position means how much asset you own, how much liability you owe, how much is the owner's claim on that particular day of the business. Details of equity, liabilities, and asset is called financial position. That is being depicted in a statement. That statement is called. Is that clear? Are we due for a break? So let us break for some time, 10 minutes. We can reassemble. Online students, we are breaking for 10 minutes. We'll reassemble after 10 minutes. Thank you.
ഞാൻ കണ്ടു ചെറുക്കനാണ്ടായി ചെറുക്കനാണ്ടി ഞാൻ ചിരിച്ചല്ല, ഞാൻ അവന്റെ പല്ല് മേടിച്ചോട്ടോ, അവൻ പല്ല് മേടിച്ചോണ്ട് നിൽക്കുന്നുണ്ടായി.
ആ ശബ്ദം കേട്ട് എന്താന്ന് എനിക്ക് നോക്കാനുള്ള മര്യാദ പോലും. എനിക്കെന്നെ നശിപ്പിക്കട്ടെ, മേടിച്ചു കൊടുക്കും. എന്തായാലും കുറെ മേടിച്ചു കൊടുക്കും. ഞാൻ 2000 ഞാൻ തന്നെ മേടിച്ചു കൊടുക്കും.
എന്നാ വിനീത് ശ്രീനിവാസന്റെ പ്രോഗ്രാം അല്ല ഫുള്ളില്ല. പിന്നെ അത് ഗാനമേളയല്ലേ, അത് മ്യൂസിക് കൺസേർട്ട്. അത് ഗാനമേള തന്നെ, ആ പേരാണെന്നേ ഉള്ളൂ. മ്യൂസിക് കൺസേർട്ട് വെച്ചാൽ പിന്നെ എന്താന്ന് വിചാരിച്ചത്. ഏതൊരാള് എത്ര രൂപയായിരുന്നു ടിക്കറ്റ്? ഏതാണ് അത് പൊട്ടിച്ച് 4 വർഷമാക്കി കഴിഞ്ഞ പിന്നെ എന്തായാലും ചെറുക്കനാ. Hello, Mister. എന്താണ് മിസ്റ്റർ? പറയാൻ മക്കളെ ഞാൻ ഇവിടെ കേൾക്കുന്നുണ്ടോ? അവിടെ കേൾക്കുന്നു.
Okay, mic is on. Everybody is listening what you are talking. Online people are able to listen. It's okay. Our
Yes,
duty
sir.
is to tell.
Yes, sir.
Yes, sir.
They'll slowly fall in line. Yeah. They just had coffee, no? Madam, coffee, tea? No, they don't have. Can you resume the class? Those are online. Can you hear me? Once confirmation.
Yes,
Yes,
sir.
sir.
Yes,
Yes,
sir.
sir.
Yes,
Yes,
sir.
sir. Yes, sir. We can hear you.
Yes, sir, we are audible.
So just we talked about the objectives of accounting, right? The basic objective of accounting is to know the profit or loss and also to know the financial position. If you say financial performance, that refers to profit or loss only. If you say financial position, that refers to equity, liability, and asset. I ask this question till we complete this entire course. So keep in mind, if anybody is not answering correctly, your assignment mark for each and every wrong answer, 2 marks will be cut. I'll come next to next week again. This girl is telling come again. I do. I do alternative days, alternative weeks. All right. Objectives of accounting, he's telling you to come again. That is to know the financial performance of the organization and also to know the financial position. You can say, otherwise we can say to know the profit or loss, or to know the equity, liability, and assets. Okay, don't tell both, any one. Okay, simple. To know the financial position, to know the financial performance. Simple. Only 2 words you have to remember: performance, position. Remaining all same. To know the financial position, to know the financial performance. Sir, are the 2 only objective? It's not only objective. It's a center objective. It's a very important objective. Okay. Before that, suppose if I want to know about the financial position, if I want to know about the financial performance, all of a sudden in a single day, can I know that? Can I understand? Can I come to know? Not possible. Then what is required? What is required then? Data we need. This equation is fine. Income minus expenditure is equal to profit. Other way around, it's loss. It's okay. But I should know what is my income, what is my expenditure. So that is not simply possible to understand in a single day. So what should I need? Data I need, okay. Yeah. So I need to have data. So having data, what does that mean? Recording. So the recording is a ancillary objective. Recording is making us to know these two things. Without recording, without keep on the transaction recorded in the books of accounts, we cannot understand these two. We cannot come out with these two. Okay. So recording is the basic objective, elementary objective, or the ancillary objective. Okay. Recording of what? Recording of business transactions. Recording of business transaction is the first objective. Okay, that enables us to know these two. Okay, after knowing these two, what do you do? I recorded. I came to know what is the profit or loss. I came to know what is the financial position of the business. Okay, so what? Okay, once again, classify comes little earlier. See, you already classified, no? The two equation, what is there? 5 variables are there. 5 or 6. Income minus expenditure is equal to profit. 3 are there. And again 3 are there. 6 are there totally. That 6 only classifying. That's called classifying. Suppose I'm telling I paid rupees 20,000 rupees to bank as interest. Is it information? It comes to a data. It is going to become a data for you. So how do you classify this? What you told? Sir, I paid 20,000 rupees as interest to the bank loan. Where do you classify in the 6? Expense, no. I paid, no. I paid. So it's an expense. You're classifying. So classifying is taking place much before this equation is formed itself. Or while forming the equation itself, you're classifying. Sir, I received 20,000 rupees from my customer. Income. I sold goods. I got 20,000 rupees from my customer. It's an income. So classifying takes place there itself. Okay, we'll come to that. While recording itself, we are classifying. Or just even after the recording also, you can classify. So classify is not a just objective of accounting. Classify takes place in the accounting. That's it. Okay, while recording, it takes place. We'll talk about that much later when we come to record. Okay, so after recording, after finding out, okay, summarizing is nothing but the 3 equations. All total asset. How much is total asset? How much is my total liability? How much is my total income, total expenditure? That's called summarizing. Okay, since you touched upon these two, I can't, postpone this. Accounting is nothing but a process of identifying the business transactions, recording them in the proper books of accounts in order to classify, summarize, and find out the effect of such a transaction. Effect of such transactions in the way of profit or loss, assets, liability. Okay, forget about that meaning. We don't want meaning and all. Just understand the logic. Later, everything is there in the book. You can read it. Now, my question is very simple. After you do recording, after you come to know the financial position, after you come to know the financial performance, what will you do? Okay, suppose the profit of the company is 10 lakhs. What is the decision you will make? This is HR, no? We are against that. We have to establish a relationship between the performance of the employee and this profit. Then only we can move ahead. Simply 10,000 rupees profit, 10 lakh rupees profit is there. You are advocating to give bonus to all the employees. What is the proof that because of those employees, this profit have come? Without that employees also profit may be possible. So that is outside our boundary of this accounting for managers. Anyway, that can be a possible. Suppose you are having a good profit, you are encouraging the manager to give bonus. Okay, possible. Okay, anything else? Projections for the next year. Okay, but yeah, investments. How do we take this 10 lakh rupees? Are we going to give to the owners or are we going to open one more branch. One more machine we are going to buy. Okay, but all these things are little later, right? Before that, what do you do?
Interpreting.
Sorry? Online. Yes, sir. Some words you are telling? Interpreting. Okay. Think in very normal perspective. You have to inform first about this performance, the owners. Who is finding out this? The poor accountant is finding out all these things. Or ERP, yes. Or ERPs. Okay, your ERP operated by some person that is finding out all these things, this statement. That need to be communicated to people, no? Who knows, who wants it. So after you arrive at these two, you have to communicate, inform to the stakeholders. Owner is only one person, no? Now government is always watching, no? Tax. To stakeholders, different people, not only owners. Okay. You understand this logic also? We are talking about companies, right? Companies. So companies are governed in India by Companies Act 2013. Simple logic. Companies, all companies, whether private limited, public limited, government company, anything for that matter. Now, you have to prepare these two statements. What are the two statements? Profit and loss statement and balance sheet. These two statements need to be prepared only according to Companies Act 2013, Indian Companies Act 2013. People may be sitting here working for some other international companies. Okay. But here subject matter is only Indian companies. If you are a company in India, registered in Indian Companies Act, you should prepare these two statements according to the stipulation given by Companies Act 2013. But there is another problem. Sir, I prepared it. I'm sending to Income Tax Department. Income Tax Department is rejecting it. Look at the government's regulation. We have to prepare. But Income Tax Act 1961 in India. Income Tax Act 1961. And every year it is amended. Just now, Madam has presented a budget, no? A month ago. Madam Nirmala Sitharaman has presented. So budget is nothing but Finance Act. Income Tax Act is getting amended every year based on the budget proposals and acceptance. Okay, so that is getting updated every year. You have to prepare one more statement, but that is not subject matter of accounting class now in this class, but I'm just telling you. Okay, one more you have to prepare. That statement only is accepted by whom? Income Tax Department for calculating your profit and tax. In this act, Indian Companies Act is giving you a lot of accounting concepts. But Income Tax Act is looking in a broader perspective that income of the company should be measured very accurately so that government will get good amount of tax. People should not cheat by taking, suppose depreciation. Simple example, 80 lakhs rupees is the asset value you purchased. Suppose I'm telling this asset can be used only for next 4 years. Then depreciation is equal to? You can do it. If you increase the depreciation, what will happen to the business? Profit. Profit will become? Profit will increase or decrease? Higher the depreciation charged, lesser the profit computed. Therefore, the profit earned. It's a simple thing. You can do it. But Companies Act is giving you some regulation on which asset. How do you calculate depreciation? That is a little relaxed and that is giving accounting importance. Accounting. But Companies Act is, Income Tax Act is also having the same provisions on which asset, what rate you have to charge depreciation. That is a little more stringent. Okay. You cannot just take more depreciation under Income Tax Act. So you please remember two statements we have to prepare. We means not in the class, the real life. But we are going to prepare only based on companies. Look at this. That's why I written here Indian Companies Act 230. Is it clear? Okay. Now, after communicating, what you do? First, you are communicating to people, right? This is the profit, this is asset, this is the liability, this is our position. Please, all of you get to know. To whom and all you will give? All the stakeholders. Can we name some of the stakeholders? This is nothing but a question. Who are the users of accounting information? Now, what are the accounting information? Only 6 information. What information? income, expenditure, profit or loss, asset, equity, liability. These 6 we are reporting in these 2 statements. Is it clear? To whom and all we can report? All the stakeholders. Can we name some of the stakeholders here? First, owners, right? Owners. If it is a company, shareholder. If it is other form of organization, respective owners, partners, owners. Sorry, who is that? Investor. What is investor? Who is investor? All owners are investors. But all investors are, why? Shareholder, sorry? Even if you have 0.000001% of shares in the company, you are also called as one of the owners of the company. There is no proportionate ownership while calculating who is the owner of the company. I have State Bank of India share, 100 share I have. I am also one of the owners. I am having some shares in Adani Power. Bought long back, believing that this government will help Adani. Of course, they did it, but in different way. I have some shares in Adani Group, Adani groups. Okay, but a different perspective. Okay, I have some shares in Infosys, something like that. If you calculate in a percentage term, it will be 0.0000 point something. Okay, so there is no concept of proportionate owner. Everybody is owner. If you have even a single share in the company, you are also considered to be one of the owners of the company. That's it. Then how investors are not always owners? All investors are not owners. No, why? Who is investor actually? Who puts money in some business? How? What are the ways in which you can put money? You can buy the shares. That's one of the options. That's one of the ways. What are other ways in which you can put the money in the company? You can give loan to the company. Can you give loan to the company? How? Have you given loan?
Lending money to the companies.
One second. Yeah. Please understand others. He is telling one new word. What is that? Debentures. Please, all of you understand. He is going to explain now what it is. Yes, sir. Who is debenture? Sir, yes. Okay. 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 Have you all understood? But there is one word called security is using. What is security? He is telling that it is one type of security. What is security actually? That's what I'm coming to. It is not the way in which you already know the word security. He is not using in that way. Security here refers to a paper. In his sentence, security means a paper, which is transferable. Which is transferable. The logic will come to later. It's a paper. Whether the paper is in electronic form or in a physical form, no matter. Okay, that's depending upon invention of IT. We are going like that. Security means a contract between two entities in which the holder of the security is having a right to claim certain amount, certain value against another entity who has given that security. If I don't want this to be held by me, I can just give to sell to another person. Transferable financial asset is called security. Transferable financial asset. What is financial asset? Financial asset is nothing but a contract in which one person promises to pay a certain sum of money to another person based on some condition. Simple example, you are getting fixed deposit receipt in a bank. That is called financial asset. Can you sell that to anybody? Somebody is saying yes. Can you sell fixed deposit receipt? Are you all okay with fixed deposit receipt? Any difference of opinion? You all know what is fixed deposit receipt, no? Yes. Can I sell that to somebody? You cannot sell. So it is a financial asset, but it is not transferable. So it is not a security. Life insurance bond you are receiving if you take insurance, that is a financial asset. Insurance company promises you to pay a certain sum of money on the happening of certain things. So that paper is called a financial asset. Can you sell that in a market? Not transferable. So it's just a financial asset, but not a security. And then what is security? Transferable financial asset. 20 rupees note you are having. Is it transferable? Completely transferable, not even transferable. If you keep it here and go, somebody takes, that is their money. Huh? Vehicles.
Registered vehicles or anything.
No, registered vehicle is not simply transfer. This is a simple transfer. 20 rupees note, if I just merely give this, after a microsecond of received by you, that is, can we do this? I take my RC book and give it to this girl. Take my RC book. Can this vehicle, is that vehicle belonging to her now? It needs registration. This money, currency note, is a negotiable instrument, freely transferable. You need not go and register somewhere. The rupee note number 450578 is transferred from so and so to so and so, get registered. No. If that is the case, we cannot buy anything, we cannot exchange money, right? But in this case, security means this one security. Rupee note is a security. With the mere delivery is enough to transfer the ownership. Okay, it's called negotiable instrument. Security. Now equity share you are buying from a company. Share you are buying from a company. Share. You go to somebody and sell it. Sir, this is my share. You are the owner from now onwards. Give money. This is what? Transferable. He can buy. He can buy from my end security in the share. Okay. So share is a security. Financial asset, transferable in nature. Any financial asset transferable in nature is security. Now, company can take money from the owners in the form of shares. Promoter is also equal to anybody who is giving money. That's all. He may be a promoter. Okay. He might have given 1 lakh, but you are giving only 100 rupees. Both are equal. Both are called as shareholders, owners. He is having higher amount of equity share. Suppose there is a decision going to make in the company, he is having a higher say. You are having a lesser say. That's all. But both should say. Both have voting right. One share, one vote. Not one person, one vote in company. One share, one vote. In that category only, promoter is having some higher advantage, some more advantage than that of minority shareholders. Okay, but why do we buy if he is having more authority? He has some plan, he has some idea, he is doing business. In that, we participate by giving some our money. For that, he is giving some return later. Okay, come back to this. So now I taken money from myself, my friend, or so many other people. All of us are called shareholders. If it's a company. Now I don't have much money to invest further. I'm going to a bank and borrowing. That's possible. But he's telling, sir, why are you going to bank? Again, there are so many people. You can go to the people only and you can promise, give me 100 rupees. I'll give you 8 rupees every year as interest. For that, not dividend, interest. You give me 100 rupees. I'll give you 8 rupees only, irrespective of my profit or loss. Irrespective of what I am doing. 8 rupees I'll give you. For that, he is asking on evidence. How would I believe it? He is giving in, not security, he is giving in on document. That document, yes, that's called bond. Actually, it's called bond. But in India, what we are using this. If companies borrow like this, we call it debenture. If government does this, or government company does the same thing, we call it as bond. In international level, we call only one word, bond. That is corporate bond, government bond. But in India, corporate bonds are called as debentures. Government bonds are just called as bonds. That's the only difference. Okay. So this is an instrument what I'm using for borrowing money from the public. So if you are buying debenture from a company, you are not a owner, but you are a investor and lender or something lender. You are investing. Investment is a broader term. What vehicle I am taking to invest, what mode I am taking to invest, that decides who am I to the company. Now, in this case, equity shareholders are the part owners of the company. The person who buys the debenture document from the company is called as, I'm using that word, credit now. Okay, let us open to that. Creditors. They are called as lenders. In normal parlance, you call them as lenders. Okay, lender. In accounting, we call them as creditors. Lenders, okay, but creditors more specific term in account. Creditors. Who is creditor now? Wrong understanding, no? Debenture holders are creditors. But all creditors are need not to be a. So creditor is nothing but a person who lends money to the company. Simple. Lends money. Lend. Who is lending money to the company is called creditor. Now the person who lends money to you by accepting your document called a debenture is called debenture holders. In that way, debenture holder becomes creditors, lenders. Okay. But some people are there, they don't give you money. They give you some commodities to you. Suppose in our case, 8 lakhs machine vendor. He is giving you a machine on credit. Now we are using the word credit because we understood what is creditor. We are introducing the word credit. He is giving on promise. It's on promise. You are promising that you are going to give the money. In accounting, we will call it as on credit. Buying something or selling something without immediate cash settlement is called as on credit. Whichever is on promise, whichever is going to take place later settlement, it's called credit. Now, anybody who is giving you material or machine, also called as creditors. They gave you some value, not cash, creditors. Now, what's the difference between these two creditors? One who has given money, another person, one who has given material or thing or some materials to you. What is the difference? How do we call them? These people are called as trade creditors. One who gives you goods on credit basis. One who supplies you raw material on credit basis can be called as trade creditors. Trade creditors. Suppose trade A, B, C, D, E. There are so many suppliers for your raw material. All of them are trade creditors. Some other accountant may use, sorry, A, B, C, D, E is too much to use. I'll put them all together. How much I have to pay to the vendor? I'll put together, then I'll call them as sundry creditors. Sundry. Sundry means what? A group of creditors. A, B, C, D, E. All of them put together. We call them as sundry creditors. Or we can call them as trade payables. If you want to name them in a person, you can say creditors. Creditors noun. It refers to a person or an entity. But you can say in other words, trade payables. Just a concept. A, I have to pay 10,000 rupees. Mr. A is your creditor. The 10,000 what you are supposed to pay is trade payables. In accounting, we can use both interchangeably. Some book they will write trade payables. Somebody will write trade creditors. Somebody may write sundry creditors. All these three are same. Yes. Nothing. All are creditors. Who lends money to you or one who supplies goods to you, whether with benefit or without benefit, no matter, all of them are called creditors. Suppose in your books, if you are writing, that time you can classify them and write it, because I cannot write all of them together. No, somebody is charging me 8% interest, somebody charging me 9% interest. I cannot club them together. I'll tell them 9% debentures, 10% debentures. Two different headings, I will name them. But a broader heading is simple concept. They are called as creditors. Okay, sundry creditors applicable only to whom? Trade creditors, group of trade creditors. Debenture holders, bank, all those things will not come under sundry. They will come under financial creditor. They are called as financial creditor. They are just financing your business. They are not giving you money free. They are giving you money for interest. They are financing your business. The bank who is giving you money as loan, the debenture holders who has given you money, or any other people who has given loan, all of them are called as financial creditor. One who gives you money on credit with interest or even without interest, no problem. Called as financial creditor. Financial creditor. Understood? Okay. So we have to inform to all these people how these business are done. Okay. I think we have deviated from the main question. Our main question is to whom and all you have to inform this data, inform this information. You told stakeholders. One of the stakeholders is owner. Second stakeholder is creditor. Or you can call them as debenture holder or lender. Third, government. Income tax department. Income tax department, you have to inform, sir. Yes, you have to inform. Why are you informing to ROC? ROC does not have any work. If you go to ROC room is only 1/10 of this. I went to last month only. 1/10 of this room is ROC room. Everything is now automated. No, 4 members are sitting there. Only 4 members. They are not bothered about your this, but you have to inform stock exchanges. If you are a listed company, what is this? What is public listed company?
Sell shares online.
Yeah, we are having provision for buying and selling. No, public limited company is allowing its members to sell their shares or buy their shares by anybody. Where it will happen? I cannot just go on the road and take, you have Infosys share or you have some other share. We cannot ask, it's difficult. So there is an organized place where we can go through a broker. Nowadays, electronically, you can log in and you can go to the broker and you can say, I want this company share, I want to sell this company share. All those things are taking place. That place is called stock exchange. Stock exchange is an organization which facilitates the transfer of securities. I want to sell, I want to buy. In India, we have 2, NSE and BSE, famous. Okay, there are so many other. They are in the process of winding up. They are not able to perform better because these 2 exchanges are performing through a satellite, through online. Others are not able to cope up with this, so they are just leaving from the business. So these 2 exchanges, we have to give this data. Okay, so that it is available in their website. If you want to buy or sell, you have to refer. If you like the company, you can buy. So stock exchanges, not ROC, stock exchanges. Okay, annual report you are going to give to ROC also. In that, the content of this may be there in the annual report. Fine. Next, who are the other people? Potential investor. Already investor, public, general public, potential investor. Okay, so you have to keep it in the website. Always this statement should be there. Okay, if you are a public limited company and also listed, this information is publicly available information, public domain. If you are not publishing this, you are punishable. Okay, so it's public information. So investor or creditor or debenture holders or banks, customers, employees are told no bonus. You should inform the employees also. Because of you, that one day they will come, no, MD will come and tell, because of you, the company is standing like this. That day all will feel happy, right? Because of you only, we have developed to this level. Thank you. Like that they will say, annual day or something. Okay, so we have to inform the employees about the company's performance. No, a private limited company need not to tell compulsorily to the general public, employees, and other people. Government, yes. Owners, yes. Creditors also no in private limited company. Private companies have a lot of privileges. They need not tell. Okay, if they want, they can give. Otherwise, it's not compulsory. In private limited company's website, you cannot find their balance sheet unless otherwise they voluntarily upload. In public limited company, if you are not finding, you write to SEBI, they will punish that company. It is compulsory to publish. You might have seen in the newspaper, no? March month, April month, you will get in the newspaper. Yeah. Okay, so that's public limited company only. Okay, so you have to inform to so many people. After informing, you have to analyze. Analysis comes later. Another objective of accounting is analyzing the financial data. You understood what is profit. You came to know what is financial position. Now you are going to analyze why this profit is there, why can't this much, or why this is coming. Analyzing the financial data. After that analysis is happening in the next module. We are going to study about next module. That is what we call it as analysis. It's not changing. Yeah. So third module is about analysis. There are so many tools to analyze, but one of the important tool is ratio analysis. Ratio is nothing but mathematical relationship between 2 accounting related variables. We are going to discuss about that. Suppose there is a company. There are 2 companies. All of you listen carefully. There are 2 companies, company A and company B. Company A earned a profit of 20,000 rupees in last year, 22-23 financial year. It earned a profit of 20,000. Company B earned a profit of 30,000. Which company is performing better? Company B. That is telling no immediately. Why you are telling company B is doing better?
Biggest loss.
Mathematically, company B has more profit. Mathematically, see. But SAR is having some other opinion. Sir, why? We cannot say B is doing better. What status you have to see?
Liability.
Liability. Turnover. Yeah. Turnover could be a good logic. That will come later. Liability later. But turnover is very immediate cause for making profit, right? Turnover and profit has quick connection. Company A and company B. So what's the turnover of company A? You tell me. Without that, I cannot come to a conclusion that which company is doing better. Now I'll give a data. Company A's turnover is 1 lakh. Out of 1 lakh, it has earned a profit of 20,000. Company B's turnover is 2 lakhs. Its profit is 30,000. Now you tell me which company is doing better. Company A. You are changing your decision, right? How did you come to know this? Which one, sir? No, cash we are not talking about. No, simple. Company A sold in full year. How much? Turnover is sales. No. 1 lakh was the sales made by company A. Company B made a sales of 2 lakhs. Both are in the same industry. Both are in the same industry. Same group of, same nature of business. Okay. But company A does a profit of 20,000. Company B earns a profit of only 30,000. 20, 30. But actually, how much profit should have been earned by company B? At least 40 it has earned. We can say both are sailing in the same speed. But here it is not so. So how did you understand this? You worked out the relationship between sales and profit of both the companies. First company's profit is 20% on turnover. So percentage is helping you. Whenever you have two different ways, we cannot come to a conclusion. Your mark is 40. Your mark is 50. Who is doing better? His mark is 40. Your mark is 50. You are doing better, but you got out of 100. He got out of 50. So the common base is important. Common base. Absolute figures will lead you to illogical conclusion. Absolute figures will lead you to illogical conclusion. We have to go for a relative figure. Relative. Out of how much? This profit. Out of 100 rupees, first company is earning a profit of 20. Out of 100 rupees sales, it is earning a profit of 20 rupees. 20% margin is there in that company. Another company, what's the margin? Out of how much sales? 2 lakh sales, it is earning a profit of only 30,000. 30,000 divided by 2 lakhs, multiplied by 100. It's only 15%. So 15% is the sales margin in that company. So that company is little underperforming in comparison to this company, provided both the companies are in the same business model or same business, same industry. The first company is in pharma, second company is in construction. You cannot compare this logic. So what do you have to compare now? Suppose if it is in pharma company, A is pharma company, B is construction company, means sales may not be taken as a base. You have to go with investment. How much if I invest in pharma industry, what is my return? Same amount if I invest in construction company, what is my return? So you have to compare this like this. Ratio analysis gives you all this comparison, but ratios again I told you on standard. Heartbeat, you told no pulse, and you told glucose level. All these things are common, but you should know who is the patient. After that only you have to come to a conclusion. Sir, this company has only 15% profit. Started only last year. If started only last year means that company is doing extremely well. Initial stage itself it is doing better. Okay, so all those things we are going to study in this particular concept called ratio analysis. Next one we are going to study very important concept, that is cash flow statement. We already studied this in one context in the before break. This gentleman was asking, sir, 30 lakhs is there in the company. Cash balance. So with that, you should not come to a conclusion, I told you. That is what we are going to discuss in this concept called cash flow statement. How much was the cash you had when you started the business in this current year? How much cash you are having at the end of this current year? How much you earned as cash in this current year? That's what we are going to discuss in this concept called cash flow statement. Okay. There are three ways in which your money is going out and your money is coming into your business. There are so many examples you can say, but we have to categorize them into mainly three categories. Now, just I'll ask you, in what way you can get money to the business? How money comes to business? Money comes to business means inflow, right? Money goes out of businesses. Now we take only for 2 minutes. What are the ways in which money can come into the business? Cash. Cash means, I mean cash in bank account, somebody deposits or somebody gives hard cash to me or somebody gives check to me or somebody gives demand draft to me. All these things I'll call only cash in this context. Okay. If that is the case, can you please tell me some of the ways in which a company gets cash? Sorry, sir. Raw materials or commodities? No, my question is, in what way a business gets money, gets cash?
Bank transfers.
One second, somebody from online telling, yes, yes, madam.
So bank transfers to the account.
Okay, some of your customer is transferring money to your bank account. Correct?
Yes, to the companies, yes.
Yeah, that means collection from customers. Okay. Since we discussed about creditor, we should not do injustice for debtors. This girl, this madam is talking about customer, right? That customer only in accounting we call them as debtors. Debtors are nothing but an entity or a person to whom your business has sold goods on credit. On promise, if you sold goods to somebody, that somebody is your customer in marketing, that somebody that's customer in marketing for us is called debtors. Debtors. No. That we already said, yes, you are their debtor. You are the debtor for that company. Correct? Okay, now this madam is telling collection from debtor is one of the possible way to collect money, cash, get cash into the business. Okay, anything else? From investors, selling your shares. Selling, the company is selling the shares to somebody, they're buying, they're getting cash to the company. Okay, fine.
Even the investors who lend money.
Okay, investor lending money. Understood? Yes, madam. Interest paid is not getting it. 1 second. Is that same thing you are referring to? You are having some money in your bank account. For that, bank is giving you interest. Excellent. Dividend. You bought the shares of some other company. That company is earning profit. You are getting part out of that. Dividend is nothing but sharing the profit of your company. You are a shareholder of a company. That company earns profit. It distributes some amount of that profit to you. That amount is called as dividend. Okay. Yeah. Yeah. Please. Yeah. Yes. Anybody can be a shareholder. A minor also can be a shareholder in a company. Company also can be a shareholder of another company, but yeah. Yes. Please. Yeah. Whatever it is. Now we are into accounts. You can ask anything. I will not say, don't raise that. Yes. Yeah. Please. What is that? Some question. Yeah, subsidy received from government. Till you are expecting? Okay. If that is the case, yes. Yes. Anything else? Yeah. If A company is being started today, B company is having surplus money, B company is buying one share from A company. I am giving money to A, getting share from A. Money is going to him now. Money is going to him. Yeah, in that way, for that company, cash inflow. For me, it is cash. That's it. Too much confusing? No, easy. Accounting is easy. Next. Any 2, 3? You have to conclude it. You are about to finish this. Any other inflows? Huh? You are all looking for loan, subsidy, all those things. You don't look for the basic core activity. Huh? Somebody told selling of goods. First one, selling of goods for cash. Collecting goods, collecting money from customer who bought goods on credit basis. Okay, fine. Getting subsidy, money from the shareholder. Then, but the shareholder money will not come every day. Once in a while, starting a company, money will come. Other time, it is between the shareholders. They themselves will settle something outside the company. Company does not have any role to play there. The money what you are giving to company by buying a share, when you will get back? If the company, yeah, never is a good answer. Never is a good answer. You never get back that money because company is having a perpetual life. If company is closed, you will get back your money. Provided company is having some cash availability. Buyback, of course, buyback is possible, but all the time companies are buying back. L&T, that what case? L&T and Mindtree. Mindtree was buying back, right? Mindtree. L&T was eyeing on Mindtree once upon a time, some few months back or some years back. Okay, there's a hostile takeover. Mindtree does not want to sell its company to L&T, but L&T was adamant in buying the Mindtree. That time, people have shares in the Mindtree, is forced to sell because L&T is increasing the price. L&T is selling 900, 800. When the shares are going for 600, L&T is ready to offer 700 or 750. Then people are forced to sell to L&T. Then Mindtree does not want to lose the control in the company. So what they are doing? They want to buy back the shares. So that time it may happen as a profitable way. Otherwise, some company may buy back also. Buyback is not a very normal, regular phenomena. Otherwise, you can sell the shares to somebody else, you can get the money. That's it. You cannot go back to the company. Sir, I gave you money when you asked me. So now you take back your equity share, give me money. Not possible. That's not in the law. Okay, that's called company itself. Otherwise, company will become a bank, no? Infosys will become a bank. One day you are going and giving money, another day you are telling, sir, I want my money back. That is not possible. For that, we have banks. You have to go there only. Okay, yes. So what are the other ways we can get money? Okay, loans. Okay, so loan, if you are getting loan, that is called financing activity. Okay, if you are getting money from your customer by selling your goods, that is called operating activity. Operating means day-to-day activity. Day-to-day, that's core business. You are selling goods and getting money. That's called operating. You are borrowing money from a bank. That's called financing activity. Financing. You are buying other companies' equity share. That is called investing activity. In these three cases, even you can have outflow of money also. Outflow. Okay. Outflow. You are buying a machine. It's called investing outflow. You are buying a machine. Investing outflow. You are selling a machine. Investing inflow. You are selling an old machine. Suppose you used machine for 4 years. Technology outdated. You are buying another machine. Machine purchase will result in outflow of money. But that is called outflow of investing activity. Selling machine is inflow of investing activities. Simple three things: investing, financing, and operating. Operating is a core area of the business. Investing means buying some fixed asset or selling some fixed asset of the business. Financing means raising capital or discharging your loan. It's called as buyback of share is an example for cash outflow of financing activity. Buyback of shares. You are buying back your own shares. Company buys back its own shares. It gives money, so outflow. Its liability is reduced. Company's capital is reduced. So it's called financing activity. So these three activities, in which activity we have more cash inflow or which activity we have more cash outflow, that need to be analyzed through a statement called. Okay. And the last module is about operating is a day-to-day activity. Suppose the fees what you pay to the Dayananda Sagar University is an example for cash inflow of operating activity. Of mine, that time what they will do? Tell me. You want to make? Yeah, then you are asking their 2 minutes. Their 2 minutes is okay. Are you able to spare 2 minutes? They are your seniors, I believe. Correct? 3 months before. Yes, sir. Come there. Yes, yes, come there, come there, come there. Four months? They are your seniors. Quick, quick, quick. 30 seconds over.
Sir, is there any announcement?
We are not able to hear you in the online class.
Yeah, correct. We can add them.
Come and have a tea, or we should come and purchase a tea.
Purchase and have. Purchase and have.
Sir, online students are unable to listen to them.
Yeah, there is an announcement. Your second semester people are making announcement. It's okay. Another 2 minutes you can take.
Can you hear me now?
Yes, yes, please. carry
Yeah,
on.
so we were making announcement actually. There is so there is event in Dayananda Sagar Kumar event branch, which is called Maru Country. So people are encouraged to put up their stalls and sell things, whatever they want to sell. So it's on Friday, March 10, from 10 to 4. So I mean, being an executive MBA, you should encourage the other executive MBA people. So we are the only people putting up the stall. So come visit our stall and buy teas and whatever is there.
Thank you.
Okay, all right. So last few. Can you hear me?
Yes, sir, we can hear you.
Yes, sir.
Yeah, thank you. So the last module, that is fifth module, that is cost accounting. Okay. Normally, academically, we classify this entire accounting into 3 categories. But in real life, it won't be classified and kept it in the departments. But Academically, for academic purpose, we classify this entire accounting into 3 categories. Branches of accounting, they call it. One is financial accounting. Another one is management accounting. The last one is cost accounting. It's not any order, just tell it. Financial accounting, cost accounting, management accounting. Okay. Financial accounting deals with, so far what you discussed, up to find out the profit or loss, up to find out the financial position. Starting from identification of business transaction, recording them in the proper books of accounts, following certain rules and regulations, and preparing the books, and then classifying, summarizing, all those things you told, no? Everything comes there. And finally, you are coming out with a 2 statement. Up to the 2 statement is prepared. Whatever you do, that's called financial accounting. Right from the identification of business transaction till the final product of preparing these 2 statements, financial statement. We call them as financial statement put together, income statement and balance sheet. Up to there, whatever you do, whatever we study or whatever we follow, all those things put together, we call it as financial accounting. After that, if you analyze the data, something I told, no, profit 10,000, another company profit is 30,000, something. Okay, these kind of relationship, ratio analysis and everything comes under a concept called management accounting. Management accounting is nothing but a branch of accounting that talks about the techniques and some methods used for analyzing the accounting data in order to get some meaningful interpretation and decision making. That's called management accounting. Clear? Management accounting takes data from where? Financial accounting. The 2 statements are the base for management accounting. Third one is cost accounting. Cost accounting deals with 2 things. One is ascertainment of cost of a product or service. Another one is to have a control over the cost of product or service. 2 things: cost control and cost estimation or ascertainment. Suppose a product you are going to produce. After producing, you cannot just go and tell the customers that this product is worth for 20, we are fixing profit of 5, 25 is the price. Then you may not be interested to buy. Before itself, you have to estimate the cost. Or while doing also, you have to ascertain the cost. Estimate is something about calculating for future. Ascertainment means what you are doing in process of production, exactly you have to identify the cost of the particular product. Suppose I am manufacturing this remote control. I should not ascertain more cost what I have not spent at all, or I should not estimate a lesser cost than that what I am really spending for making this. Both are not good for the business. If you overestimate the over ascertain the cost of a product, means in the market people may not be liking your product because it is highly priced in comparison to competitor. If it is underestimated, if it is under ascertained, that time you will be selling it for a lesser price. Maybe more number of people will buy, but your profit is affected. You are not really getting profit. Okay, so both are not good. For that, we have some guidelines, we have some techniques, and we have some methods. All those methods, techniques put together, we call it as cost accounting. Any methods or techniques which are used to ascertain the product cost or service cost, at the same time to know about the control over the cost. Controlling means not reduction. Controlling means reasonably you should spend money for making a product. Wastage should be avoided. Okay, unnecessary spending should be avoided. So all those things comes under a concept called cost accounting. That's also we are going to discuss. In that, very important thing is marginal costing. Okay, so these are the various aspects which we are going to discuss. No, which we have already discussed in the syllabus. Each and everyone will take one by one. Okay, before we close, we have 5 more minutes now. No, sir.
Now, much more minutes.
Yeah.
Today, 12K we are paying. I calculated.
I'm taking it. Listen, summary. So, please write, these 2 minutes are very important. Whatever so far discussed, you may forget. Okay, but you should not forget, but you may. But this is what I'm writing now in the books of account is very important. Okay. We have been discussing for last few minutes about identification of transaction, right? How do you identify a transaction? Madam, before identify, how do I classify?
the cash or.
How do I identify the transaction? What I am identifying? Business transaction. How do I identify?
Some paper.
One person. We don't have time.
Invoice says there is a sale happened.
That's it. Very good. Based on evidences, based on documents. Invoice, rightly you are using invoices. It tells about sales. Cash invoice, credit invoice. It tells about sales. Accountant tells about salary paid. Okay, like that there are so many evidences. So evidences is helping us to identify the business transaction. Please write down this. I'll just give it's like a flow chart. It's like a one after another. Okay. First, the transactions are entered in journal. Journal. Write the word journal. Journal. Okay. Then one down arrow. Next level. What is happening? Of this in journal is nothing but a book which records the business transactions on a day-to-day basis. After you identify where you are taking it to journal. Okay. Next line. Ledger. Ledger. After you make journal, the classification summarizing all those things takes place in ledger. Ledger is a book in which your summary or your classification takes place. Suppose in a particular month or in a year, you might have paid 12 times rent. 12 times rent. In journal, you cannot find how much rent you totally paid. Whenever you paid rent, you will write it in journal. But how much amount I paid as rent, you don't know in journal. For that, we need another step that is called ledger.
Where you add up all the rents and make one line.
One line for the total rent, how much? 12,000. You have to find out from journal. Journal is a base for making ledger. Okay, third one, trial balance. Trial balance. You are identifying transaction through documents that goes to journal, that comes to ledger. After ledger is done, to check the arithmetical accuracy, we are preparing a statement called trial balance. Trial balance. Trial arithmetical accuracy. Arithmetical accuracy. We are preparing a statement. That statement is called trial balance. After trial balance is prepared, what are we going to do? We are going to prepare these two statements. What is that called? Financial statements. Financial statements, which include statement of income, statement of profit and loss, balance sheet. These two statements we are going to prepare. Okay. One, yes, sir. Arithmetical accuracy means, anybody?
Mathematically.
Plus minus.
Correct or not?
Yeah.
Which involves only plus, minus, division.
Division. Yeah. Arithmetic operation. Suppose we are adding the rent, all the rent we are adding. 10,000, 10,000, 10,000 is there. 1 month you paid only 1,000. But you taken 12 into 10, 1,20,000. But actually it is 1,11,000. That mistake may be there in the journal. Those days people used to do manual calculation, right? For that purpose, we have this exercise called trial balance. It will tell you if there is any arithmetical error, arithmetical mistake. We'll talk about that in next class. So this is the coherence. This is the order. Journal, ledger, trial balance, statement of profit and loss. Last one is balance sheet. Just add one sentence, one line. Journal you written, no? Journal. Near to that, put one slash or. That's another option. Either journal or one more option is there. That option is called as subsidiary books. Subsidiary books. You can prepare journal or you can prepare. What is that? Keep thinking. We'll discuss in the next class. I will send you some videos today. I picked somebody from your group and I sent one link to that person. I don't know who is that person. Anybody sitting here? But up to late afternoon also that message was not having blue tick. Okay, maybe I'm sorry. Yeah, maybe that person might have read it. If that person is available and listening to me, please send that link to all the people and get joined. You all please join in that WhatsApp group. So many groups may be there. Yeah, we create one more group only for accounting for managers. I may get lost in that entire group. So many message comes in for all the subjects. So we keep one separate group for accounting for managers. You please join there. I'll send you some YouTube links. Please listen and come to the next class. Thank you. See you.
Sir, any books do you suggest for us? Sir?
This is already there in your LMS. Actually, we are using another one called ERP. I'll upload that in.
Okay, thank you.
So far, it is not there because I will upload. Okay, it was there in another platform. I'll transfer that to your whatever you are using. I'll do that also. I'll do that also. I'll sure. I'll do it. I'll just post it in our group. Yeah. There is no separate book, anything, but I'll give you some material. Only you read that. Yes, yes. Yeah. 98860
98860
49
49
464.
464. I'll just send you the link.
Yeah. No, I already created a group and I sent it to them.
Okay, sir. I'll just send you a hi so that you can share the link.
Yeah. Right away. Guys, those are online. We are winding up now. We can meet in the next class. Thank you.
Thank you.
Thank you.
Thank you.
Thank you, sir. Bye.
Thank you.
Thank you, sir.
Bye.
Thank you, sir.
And whoever has that link, kindly share it to us.
Did someone make a note of sir's number here online? I made a note of 5 numbers.
No.
Okay.
Anyway, I think it should be available in the recording. Anyway, it is being recorded still. So
Yeah, we need to wait for 4 days.
that is unfortunate, but yeah.
Yeah, I don't know why it's taking this long.
Let's see. Okay. Thanks. Have a good day, everybody. Yeah.
Thank you. Bye-bye, everybody.
Good evening. Yeah.
You also uploaded in the same.